Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Hey everybody, welcome to today's edition of the Daily Market Commentary. It's Friday. It's contract rollover day. Keep that in mind. Hope everybody's having an absolutely amazing day. Let's go ahead and get doing what we do each and every day, looking at the same 10 to 12 futures markets from an educational perspective, identifying both breakouts and reversals. Yesterday we did not have a DMC because it was our live trade room. For those of you that are interested, we have one more week in our live trade room one more session in our free preview week for our live trade room. So Sunday night at 7 o'clock, we're going to be doing another one. Love to have you. So let's go ahead and dive right in. Looking at the S&P today, we are down about 12 points, moving down fairly at a fairly rapid pace, but nowhere near any of the levels that we looked at for any of our trades. And my response yesterday to people was, you probably just kind of want to sit this one out. Wasn't a whole lot happening. We are setting up for a potential breakout above this area since we were basing down in here, so we'll keep an eye on it for a potential breakout trade. But for now, I've really got nothing I want to add to it, especially on a rollover day. So I'm gonna leave this one be and look and see what comes available to it later in the day. You may get on a 15-minute chart, if you're so inclined. Here's the European market open time of the day right in here. So if we get a rally up, you may get a little shot somewhere up in here for some sort of a reversal. But I'm not sure if that's going to be the level that we're going to want to use for, super high probability, right? So for now, if you are going to do something, you want to do it on a 15-minute time period. Would be this 2 a.m. level possibly, but this has already been retested here, and then price try to move into it there. You may get a little bit of a shot on a rally up. Remember when you're going short, you want to look for rallies. You could get a little rally up to this region here. So I will put this one in. Not sure that I would jump at that one, but that one actually looks like it could work out pretty well, and it's a very small risk. Next, NQ. So on our NQ level, looking at the NQ, not a whole lot occurring on this one either. Had looked at a potential reversal on this one yesterday. Once again, very similar picture. If you go to a smaller time period, you might get another shot at this little level right in here. This level actually serves as a little bit of a flip reversal. It just moved. I'm recording this at 5:30 in the morning Central Time, and so it was at about 4:30 in the morning Central that level was formed and created. But it did act as an old area of support right through here, right? So that could be really what makes that level effective is that area of support that's right in there. Next, crude oil. So in crude yesterday, I was looking at this little level right here for a potential reversal. This was the big move up after the attack on the tanker in the Strait of Hormuz. We saw well, maybe we'll get a little reversal, and we hit it, and then price came up. But the fair price value area that was opposing was right here. So you had a very low probability trade as far as your reward or risk is concerned. But everything seemed like it was going to work out okay. Price came in, gave us one little move away, and then dropped through. Now, that being said, that area does still become now a potential for a reversal in through here. So keep an eye on a reversal in through here. Stop obviously would go above the pivot, but keep an eye on an area for reversal here. We could even break down as we're putting a little bit of a tweezer area right now. It's not a tweezer top because it's not after a move up, but there are definitely tweezers that are forming right through here. Our big trade yesterday from the live trade room was gold. So for those of you that are taking our live trade room preview, you got a chance to get involved in this gold long. So leave me a comment down below if you took the gold long, and that one really has made a very strong move up, hitting target 1 and it's got room to continue on to target 2 up above us. So that one is moving well. I would say at this point to take your stop and move it up underneath one of these areas of demand specifically the one that was formed around the Australian market open, because the Aussie open is what causes prices to rally. So that's what I would say with that one. As far as our 4 hour, looking at our 4 hour, there's still room for price to keep going up and continue to go a bit higher. Now, looking at our currencies and bond markets. Now we have a couple of gaps in our currencies just due to contract gaps, but those gaps matter, and so I'm still going to look at them and pay attention to them. Now, in the bonds, we'd had a little bit of a supply level up here. This was one of them where the 6 candle rule came into effect. 1, 2, 3, 4, 5, 6. And then it kind of stayed below. So worst case scenario in this is that you should have been stopped out at basically break even. Now, once we've seen this occur, we've gotten new higher swing highs. We have a number of reasons to look at potential longs. And so this could be, if we get a speed candle retracement, you could get a shot right here. So that would be what you look at for the speed candle retracement. And then your stop would be below this pivot here that is closest to it. Inside of the Aussie, we gapped up on our contract rollover, and that gap up took us right into a really nice supply area. Now, that supply area was formed at 8 o'clock at night. I did not have a trade set up around this supply area, and I wouldn't anticipate most people would. However, we are setting up for a potential breakdown through below here. So if we base below this level, now we have to have basing in front of the level. Remember, basing in front of the level kills a reversal, helps a breakdown. So if I base below this level, I think this could make for a pretty nice breakdown. Now be aware of my room to roam is limited because of this. All right, a little bit of a limited on the room to roam because of that area of demand. In the euro, we gapped up way up in here. To this level up in there. Now, if I was just looking at the actual M contract, just looking at the actual June contract, certainly that gap doesn't really exist, right? But when we look at it, we have to look at the new one. Which has prices coming way up here. I'm going to leave these areas in play because I think that they still may act as demand. Remember, old support, old resistance oftentimes acts as new support. Let's see what happens with those when the price comes back into them. Beyond that, if I go to the daily chart, we definitely have put in some lower momentum on our euro, so we could see the euro maybe gaining some strength. Canadian dollar as well, we still have our demand level down below, right in here, where I think we could see a reversal. We also want to throw on this little wick over wick supply area up here. All right, next, pound and Japanese yen. So in our Great British Pound, obviously another one where we had our contract rollover gap. So our contract rollover gap, we gapped up. We are still below our breakout area, but we gapped up and immediately sold off really, really hard. On this piece. Oops, keep hitting the wrong button there. Maximize sell. There we go. We gapped up and immediately sold off pretty hard on this. So where would we be looking at for our next move? Well, our next move, in my mind, if I go and look at this on a 4-hour time period, we're still kind of sideways chop, but I still like this for a breakout to the upside. I'm not changing that bias. I'm going to stick to that bias going forward. We're filling this gap area here, getting a little rally off the gap fill. Now, if you're trading on a broker that like TradeStation that uses continuous charts, you may not see some of these levels, right? Because you may be adjusting your chart. Well, I'm not necessarily. What I found is it doesn't make much sense to adjust my charts. I think we could roll over from where we are right now. So I'm sure by the time this video comes out, it's going to be down here a little bit. It takes me a few minutes to render the video, but just keep an eye. We could be rolling over right from here. Japanese yen, I'd looked at this green area as potential breakdown, but we gapped up. And so on our gap up, let's see if price continues to run, if this becomes kind of a gap and go scenario as we've gapped up. Now, looking back in our 4-hour, We're sitting right near an area of supply. It's not beautiful supply, but it could, give us a little bit of a challenge on a pullback. If you're so inclined and want to give this one a shot, I think that we could be setting up for a little bit of a breakout above here overall. So remember, if you're going to hold something that you do have contract rollover to pay attention to, this is something that can bite you if you don't understand how futures works. So make sure that you understand the rules and kind of how they work and what it is that you happen to be trading. Also, if you want to hold something, look at utilizing options as a way to hedge your positions and holding things over the weekend. That's what options were created to do, was to act as insurance. Use them as hedges to protect yourself over a weekend. If maybe you're still in your gold long, hold that thing a little bit longer. So Sunday night, 7 o'clock, go to tradersarmy.com, join our free live trade room. It's a chance for you to see what it is that we do. It's our last one of our free preview week, and I look forward to seeing some of you there. So I hope you guys have a great day. And social gathering in Chicago. If you're in the Chicagoland area, you can come to our social gathering, which is also next week. We're having something. So thanks, buddy. Have a great day.